Okay, children. Now let us start with this chapter number 18, that is national income and circular flow of income. Okay, so I hope you watched the introduction video of macroeconomics. So now let us begin. What is national income? Now, national income is defined as the money value of all final goods and services produced by the normal residents of a country. Now, remember this point. It's very much, very, very important. Normal residents of a country. Okay. Whether operating within the domestic territory of the country or outside in a particular year. Okay. So, by national income, we are actually referring to the final, the money value of final goods and services. Okay. Of all the final goods and services. Okay. By goods, we mean the tangible merchandise, and by services, we mean intangible. Okay. Produced by the normal residents of a country, whether they live and perform economic activities inside the domestic territory of a country or outside the domestic territory of a particular country. Okay, that is called national income. Okay, this operation within the domestic territory and outside we will discuss afterwards. Okay, now national income, first of all, it is a monetary expression, because whenever we uh, express income or expenditure, we have to express in terms of monetary value only. Okay, and in national income we include only final goods and services. Okay, the intermediate goods and services are not included out here. Okay, flow concept. Yes, national income, it is actually a flow concept. Okay, it is not a stock concept. Okay, it is not fixed, it is a flow concept. Okay, remember that, because it flows over a period of time. Okay, now current output. Yes, it focus in the current output. By current output, we mean that when you calculate national income, you only refer to the output of a particular product for that period only. Okay, you will not count those items which has been already sold as a second hand material. Okay, so if you purchase a second hand bike or a second hand house or computer, mobile phone, whatever, okay, that will not be recorded or counted in the national income. Okay, they are not included when you calculate national income. Okay, now residents and domestic territory. Yes, it's very, very important. Who are the normal residents and what is the domestic territory of a country? Okay, that will also define your national income. Okay, now who are the normal residents of a country? Now, a normal resident of a country refers to an individual who originally resides in the country and whose center of economic interest also lies in that country. In simple language, whoever are the citizens of a particular country, for example, India. Okay, now you have Aadhaar card, so you are a citizen of India. So you are a normal resident of India. Okay, uh, but there are other things also, like some people, okay, from foreign, they come here and they stay here for at least 2 years or 3 years, and they can also be regarded as the resident of our country only. Okay, so there are certain things about that. Let us not go into it. Okay, let us just assume that we are the normal citizens of a particular country, say India. Okay, now the normal resident, it can be both individuals as well as institutions. By institutions, we mean the financial institutions like, I mean the banking sectors, okay, like SBI. Uh, we have SBI branch in the foreign country as well. For example, Nepal. For example, Afghanistan. Okay, so we have SBI branches in the foreign countries. So basically, they are institutions, right? So these institutions are also regarded as the normal resident of a particular country. For example, if you or maybe okay in your family okay, there may be someone who is in Dubai, that is UAE, okay, or maybe in Australia or US, Japan, okay. So they are working out there, but they send money back to India. Okay, they are not the citizen of that particular country. Okay, they are just out there for the work. Okay, so they will come back here, isn't it? So they are also regarded as the normal residents because they are performing or operating outside the country, isn't it? Outside the national boundary of our country, isn't it? So the normal residents, they can operate within the national boundary of our country or outside the national boundary of a country in a particular year. Okay. Now, following are not included under the category of normal residents. As you can see out here, that number one, foreign tourists and visitors who visit a country for recreation, holidays, treatment, study, sports, conferences, etc. Because these people are here only for a short period of time. Okay, so they cannot be regarded as the normal resident. Okay, and number two, foreign staff of embassies, officials, diplomats, and members of armed forces of a foreign country located in the given country. For example, like in New Delhi, we have so many embassies of foreign countries, say Russia, Israel, US, okay, even China, Pakistan, so many embassies we have. So the foreign staff of embassies, their officials, and the diplomats, they cannot be regarded as the normal residents. And members of armed forces, like we have, the US. Let me give you a very good example of US only. US, they had deployed their soldiers in Afghanistan, right? So the US soldiers who were deployed in Afghanistan could not be regarded as the normal resident of Afghanistan. Why? Because they are the armed forces. Okay. And they were actually deployed by the government of the particular country. So they cannot be regarded as the normal resident of a particular country. Now, at last, international organizations like UNO, WHO, UNESCO, UNICEF, okay, these also are not regarded as the normal resident because they are international organizations. Okay. Now, circular flow of income. You already know this circular flow of income from class 9 because in class 9, if you have taken economics or economic application, you can find this circular flow of income. Okay. But still, let me just tell you in brief that circular flow of income is actually a model of the economy. Okay, and by economy we mean the system of distribution of goods and services with a view of satisfying human wants, right? So the circular flow of income, or just circular flow, is actually a model of the economy in which the major exchanges are represented as flows of money, goods and services, etc. between economic agents. By economic agents, we mean household, firms, government, and ROWs, that is rest of the world, ROW, okay, rest of the world, okay. The flows of money and goods exchange in a closed circuit correspond in value but run in opposite direction. You know, they just run in the opposite direction. I will show you later on how it happens. Okay. This circular flow analysis is the basis of national accounts and hence of macroeconomics. Okay. Now the types of models. Now this circular flow, as we already discussed, that it is a model of economy, okay, which express the exchange and the participation between the different economic agents. Okay. So we have three types of models. Number one, two-sector model. Number two, three-sector model. And number three, four-sector model. Okay. Now let us see what are these models one by one. Two-sector model. In a two-sector model, only households and firms are present. Household, they provide factor service to the firms, okay? Because for the firms, household is one of the factor of production, that is labor. Households, they provide labor to the firms, that is factor service. Remember, okay? Factor service. And for providing this factor service, they receive factor income, wages. Okay. For example, let us assume that you work in a school, okay, in our school only, as a teacher, for example. So school is a firm and you are a household. So you provide factor service, you provide labor to the school, and school in return will pay you, isn't it? So whatever the money that you received is known as the factor income, okay, factor income for you. But for the firm, that is the school, it is known as the factor expenditure, okay. For one party it can be expenditure and for the other party it can be income, okay. This is nothing but the core basis of double entry bookkeeping, that is the debit and credit side. I hope you know that from accounting. Anyway, now households, after earning wages or uh, salaries or the rents or dividends, now they will spend that money, okay. So that is known as the consumer expenditure. For example, if you work in a factory of Coca-Cola, let us say, you earn money, but as an individual or as a consumer, you have to spend that money for buying that product, Coca-Cola product. Maybe not you, but your family members, of course, who depend upon you. Okay, maybe your children. Okay, maybe your family members, other family members. I mean the relatives, etc. So they want to have that product, say Coca-Cola. So you have to spend that money on that part. Okay, so that is your consumer expenditure. Okay, and when you spend the money, what they will give you? They will provide you the goods and services. Okay, so by firms, we are not only talking about one particular firm. Okay, we are talking about the entire industry. Okay, whatever the aggregate number of firms present in the country, because now we are looking at the economy at a macro level. Okay, so you may not spend money in one particular firm, but you may go for the movie, you may go to KFC, you may go to there is a new restaurant out here, Blue Sage. Okay, so some of you may want to go for this place, that is Cafe Coffee Day. Okay, so that is your consumer expenditure, and when you spend the money, you will get the goods and services. So as you can see out here, this the household is providing you the, I mean, to the firms, they are providing the labors, that is the factor service. Okay, and the firms in return, they provide you goods and services. Okay, as they are highlighted with black. Okay, whatever are highlighted with black, They are actually called the real flow. Okay, and whatever is highlighted with red ones, that is actually the money flow. How money flow it is? Because the firms, they pay you wages, salaries, okay, rents, and the dividends, okay, in terms of money value. Now again, household or the they make the consumption expenditure, and this consumption expenditure is also made by cash only. I mean the money only. Okay, whether you pay by cash or UPI payment, or by you pay by the card, okay, whatever, but it is expressed in terms of money value, isn't it? So the flow that is related to money values and all, that is actually the money flow. Okay, and where the flow is real, that is about the labor or the goods and services, that is called the real flow. Okay, now you may wonder how households can receive rent. For example, you have a room, say, okay, let us just say for an example, you have a room and it is lying idle. You want to uh, give in rent. Okay, now there is a shopkeeper. Okay, now I mean a businessman, he comes to you and say that he wants to establish a shop out here. So now he will be the firm, isn't it? Now as a firm, he or she must pay you the rent to you. Okay, so that is a factor service. And what you have provided, actually you have provided the land. Okay, I hope you understood this particular model. That is the two sector model. Okay, now let us go to three sector model. Now it becomes a bit complicated out here now in three sector model. This households, firms, we already know this relationship, right? But there is one more entity known as government. Now this we already know the relationship between the household and the firms, but what about the government now? What about the government? Government, what they do is that they impose tax from the households as well as from the firms as well. Okay, from households, that is your indirect tax, that is GST, okay, VAT, excise duty, okay, custom duty, because all the products in India has not been included in I mean under GST. For example, petroleum. Okay, petroleum is not under GST. Okay, but there is a talk going on. Let's see. As well as households, they pay income tax. So direct as well as indirect taxes are imposed upon the households. Okay, and from the firms also they collect tax, that is known as corporate tax. Okay, so from both households and firms they collect tax, and now they invest the same in market. That is, they, I mean the government will construct the infrastructure, okay, roads, okay, this street lamps, okay, government hospitals, okay, they also have to pay to the government employees as well. Okay, so this is how the three sector model it works. Okay, and as per the Keynes, okay, as per J.M. Keynes, this two sector model and three sector model is known as the closed economy. Remember, closed economy. Okay, because there is no intervention of foreign entity out here. Okay, in two sector model as well as from the three sector model. Okay, you can see very clearly that there is no intervention of foreign entity, right? So this is known as the closed economy. Two sector model as well as three sector model. But now let us go to four sector model. Now this is more complicated now. This picture has been taken from the Wikipedia, by the way. Let me show you a nice picture. Okay, I hope you can understand this part. Okay, so after understanding this three sector model, now let us go to four sector model. Okay, this government, okay, household, and firms. We already know the relationship between them. But there will be one more entity in the four sector model that is called the rest of the world, ROW. Okay, they also come out here. And their actually main role out here is for export and import. That's it. If any country is exporting and importing from other countries, then there will be the four sector models out here. Okay, and according to James Keynes, this four sector model is an open economy because the country is open to the other world, right? Because the company is, sorry, because the country, sorry, not the company, but the country, because the country is open to the entire world, okay? And it is exporting to the other countries as well as importing from foreign countries, okay? So here we can see there is the intervention of foreign entity also, I mean the foreign countries as well. So this four sector model is an open economy. For example, uh, we import oils from the foreign country, right? We import oil from the foreign country because the reservoir that we have is not enough to suffice the consumption of our citizens. So we have to import. So if the import fails, then the uh, entire country will be at unrest. Okay, the petroleum price will be very, very high. Okay, and we export also. Okay, we export spices. Okay, we export rice, wheat. Okay, onion, tomato, medicines, vaccines. Okay, so we export to the other countries as well. So this is how the circular flow of income, it helps us to understand what are the roles or how these agents, economic agents, they are connected to each other. Okay, so this is about the circular flow of income. And you can see here in this book that this two sector model without savings and investment, three sector model also with savings and without savings and investment, don't go into it at the moment. Okay, don't go into it at the moment because these, as you can see out here, this leakage and the injection, okay, I will explain when we go to the appropriate chapter. Okay, don't worry about this part. Okay, you just understand the relationship between these entities in an economy, okay, at the macro level.